Welcome to TP Talks, PwC's Global Transfer Pricing podcast series, where PwC tax professionals share their perspectives on key transfer pricing developments. In this episode, we will give you an update on transfer pricing in Hong Kong, including new transfer pricing requirements. My name is Dana Hart, and joining me today from our Hong Kong office, I have transfer pricing partners Cecilia Lee and Peter Bruin. Thank you both for joining me, and welcome to the podcast. So why don't we go ahead and get started? As I mentioned in the opening, Hong Kong has new TP requirements. Cecilia, what are the key changes in Hong Kong transfer pricing?
Yes, Dana. So in Hong Kong, there's always been a transfer pricing framework. But in fact, as of July 13, 2018, this has become the law. So now we have formal transfer pricing rules that cover company to company and head office to branch transfer pricing. The formal guidance to that law, however, has only just been released this summer. So what this does is now this actually formalized the old regime. The main change, I would say, is that it elevated transfer pricing framework from what used to be only an anti-avoidance issue to now also a compliance issue.
Thank you, Cecilia. So, Peter, coming to you, what is required for transfer pricing documentation now in Hong Kong, and why is it important for companies to deal with this?
Sure, Dana. Thank you very much. So, first of all, I think it's important to realize for Hong Kong tax return purposes, Hong Kong follows a self-assessment regime. So, therefore, the burden of proof is on the taxpayer to get their tax return correct, and you ultimately are expected to assess what goes into your tax return. So, from the IRD's perspective, what they have told us, and they've been very clear in their guidance, is that they expect all companies which file a Hong Kong tax return, which have related party transactions, to be able to show that those transactions are at arm's length, unless those transactions meet very specific kind of domestic exemptions. And they are expecting documentation of that to enable you to file a tax return correctly, in the form of, at the very minimum, a functional analysis, some economic analysis to show you've applied the OECD transfer pricing guidelines to the pricing of those transactions, and that you've got appropriate benchmarking to support the pricing that you have taken. That is effectively needs to be done before you can file your tax return, because it's really important for you to be able to show that you've made reasonable efforts. And this term reasonable efforts is effectively the term that the IRD uses to show that you've been a good taxpayer and you've made good faith efforts in trying to apply the TP law. And documentation is your way of proving that. And they've come out and said if you can show that you've made reasonable efforts, even if the IRD disagrees with your transfer pricing ultimately, then they will give you, an exemption from tax-geared penalties if they subsequently make an adjustment. If you can't show you've made reasonable efforts, i.e. the analysis was prepared after the tax return filing date, so you can't show that you've done it before you filed the return, or the analysis is incomplete or doesn't have sufficient detail or is misleading, then they may then look to apply tax-geared penalties. And in Hong Kong, those can be extremely high, or anything up to 100% of the tax underpaid as a result of the adjustment. So that applies to all taxpayers. In addition to that, starting for the 1920 or 2019-2020 year of assessment, which the first accounting period will be those with their 31 March 2019 year end, larger companies that exceed certain thresholds also have a formal master file and local file requirement which they need to prepare. And these come together. If you have to prepare one, you have to prepare the other. And those are required to be prepared within 9 months of the year end. This is very important because there has been a little bit of misunderstanding in the market for those assuming that if you don't have to meet that formal master file, local file requirement, you don't need to do TP documentation. The latest IRD guidance makes that very, very clear that everybody that files a tax return where transfer pricing will impact that tax return needs to worry about this and needs to have at least some degree of documentation in place.
Thank you for laying that out, Peter. Coming back to you, what are the unique aspects of transfer pricing in Hong Kong that people need to be aware of?
Yeah, so Hong Kong's got quite an unusual tax system in that we apply a source-based tax system rather than a residence-based tax system. And what this means is that, unlike in many jurisdictions, domestic transactions between two entities which are both deemed to be carrying on business in Hong Kong can look quite different and can have quite different tax attributes because the income derived from those transactions may or may not be sourced in Hong Kong. Because of this, that means the IRD really is focused on domestic transactions where there is a real tax difference. So domestic transactions can be caught. Now, luckily, they have created some exemptions, and if you really can show that there is no actual tax difference, then there are exemptions. I think that's definitely something that taxpayers with some domestic transactions should be doing that analysis to see if they meet those exemptions, but it's certainly not always clear that that will be the case. I think the second thing is the interaction with source-based taxation, because even on international transactions, there may be transactions which are where the income may not actually be deemed to be sourced in Hong Kong, even though it's a Hong Kong resident entity which is involved, and therefore Hong Kong may not tax the income. Now, some people may be wondering, well, why does Hong Kong care about the transfer pricing if the income on the transaction is not going to be subjected to Hong Kong tax? But the IRD has come out very strongly and said, no, even in those situations, we require the transfer pricing analysis to be done correctly. And I think the reason for that is twofold. Firstly, I think Hong Kong does need to maintain its treaty obligations. The treaty obligations do require it to apply arm's length transfer pricing in accordance with OECD standards, and that is what the government will do, irrespective of how Hong Kong ultimately decides to tax that income under its local domestic laws. But secondly, the IRD may not necessarily agree with the taxpayer's position on the source of the transaction. And I think it's very clear the IRD does want to understand, they want to see these transactions documented in the tax return, even if there's no tax impact, so that they can at least make an assessment as to the validity of the source claim and assist them in their auditing activities. I think one area where we've seen this be particularly apparent is in relation to interest-free loans. It's very common for Hong Kong entities to make interest-free loans, whether that's domestically or overseas. And this is an area where there's quite a lot of complexity because in some circumstances, Hong Kong may not tax the interest. In other circumstances, Hong Kong may tax the interest. But the IRD is become very, very concerned, and they really are looking at the transfer pricing around these arrangements and see it as a high-risk area where they're going to be doing particularly looking at this. And so, again, anybody with interest-free loans in Hong Kong probably does need to look at this, both from the point of view of the IRD wants to see these documented in your TP documentation, but also they will want to use that information to then consider whether such interest may actually be taxable if there was a TP adjustment.
Thank you, Peter. Cecilia, I wanted to ask you, how do you see the IRD's approach evolving?
Yeah, so Peter actually went through a pretty detailed sharing about some of these compliance requirements. What I'd like to share is that, because I know in the overall business community, Hong Kong in the past has always been known to be a very tax-friendly jurisdiction, and it continues to be so, facilitates a lot of business transactions and growth in the region. For companies who want to operate in China and elsewhere, Hong Kong still continues and remains to be a good platform. I think one of the trend that we are seeing is that, the IRD is taking the enforcement of BEPS implications and implementations quite seriously for a couple of reasons. One is that it certainly does not want to be perceived as, as a tax haven or to be perceived as encouraging any tax avoidance behavior. And to be frank, I think that the notion that, Hong Kong taxes on a territorial regime, has this offshore, claim decision available lawfully, it does create some sensitivity. And so I think some of the actions that we expect to see as time goes is, number one, the IRD is quite serious about ensuring full compliance for companies who actually do need to be prepared and have documentation ready on a contemporaneous basis. So that's for sure, number one. It actually also went to pretty lengthy detail recently in terms of sharing is objectives and its actions in enforcement. So, for example, there's this new web page on their website, which covers the documentation requirements, and it also mentions about compliance check. And as far as compliance check, the IRD had also, been quite explicit about sharing how they view the upcoming transfer pricing examination process would be. So this is a bit of a change in the tone, if you would, for the Hong Kong IRD, which has in the past been rather lenient compared to many other jurisdictions. So again, in this latest sharing on the transfer pricing examination process, it actually divided its approach into 3 phases: the planning phase, the execution phase, and the resolution phase. And I think, the interesting point to note there is that it anticipates to complete this process within about 2.5 years, less than 3, which in my mind, could be viewed as rather aggressive, to be honest. But on the other hand, it also, is stepping up on its resources. So, well, maybe it's not so aggressive at the end of the day. It's hard to say. What we do know is it is taking it quite seriously so far, so much so that, they were quite explicit about sharing the process. They're stepping up on its resource. They are forming a more specialized task force team to handle, tax transfer pricing audit matters. They also have devoted, more effort recently in handling APAs. I think, this new change in the transfer pricing in Hong Kong comes in all aspects. Number one, the documentation becomes mandatory. So you have to do it. If you, cannot be exempted from the threshold, even if you are within the threshold, you still should prepare documentation. And then second, it went to the extent of making sure the business community is aware of their approach in transfer pricing examination. Finally, it has stepped up its resources in handling these transfer pricing audits, which we are seeing certainly an uptake recently. And then also, they also have stepped up in handling more APA, MAP, competent authority, dispute resolution processes, which is an area that we clearly expect will be more active going forward. So I think, in a sense, Hong Kong has kind of got on the same high-speed wagon, if you would, as with many other tax authorities. But the important thing to note here is while Hong Kong is picking up on all these efforts, we do have very good communication channel with the authority. Oftentimes, we have taken sensitive issues, procedural issues, filing matters on a no-name basis with the tax authority and have gotten very, very good feedback, which actually does show in the law and as well as in actual cases that we handle. So I think that is a more positive note. You can talk to them. There is a channel, and they do listen and could accommodate some of our requests. So there'll be more interesting things to come for sure, and we look forward to continuing to update everybody as time goes. Thank you very much, Dana.
Thank you, Dana.
Thank you, Peter and Cecilia, for giving us an update on Hong Kong transfer pricing. I'd like to thank our listeners as well. If you have any questions regarding this podcast, please contact the speakers. You can find their contact information in the description of this episode on our TP Talks site at pwc.com/TP Talks. Thank you.